Good day, good folks. Hump Day Real Estate with Kendell. I'm Marcellus Kendell, and who do we have here today?
My name is Marvin Reese, CLA Title and Escrow.
Mr. Marvin, how's everything going?
It's great, man. Can't complain. Weather's a little nasty outside, raining, thunderstorm, and that type stuff. But, we're here and we're breathing. A lot of people didn't wake up this morning, so pretty blessed, man.
Yes, sir. You got it. You got it. Hey, so Marvin, everybody's talking real estate recession and all kinds of stuff. I wanted to bring you on because I wanted to learn a little bit about title, escrow agents, what you guys do, how should folks, when they're looking at buying or even selling a home, because sometimes I believe that sellers may need to go in and get different things figured out about their property and title and all of that stuff. So tell us a little bit about yourself and the company and what you guys do.
Absolutely, absolutely. Before I go too deep into myself and the company and what it all does, just one of the things I frown upon after being in the industry for so long. I personally hate to see when a seller retains their own title company. The buyer chooses the title company for the real estate transaction. Okay. The title companies, we do the same thing. So whether you as a seller get your own title company or the title company representing the buyer, title companies are supposed to be a disinterested third party in the transaction. We don't represent the buyer or the seller. We represent the contract and getting the closing to the table, making sure that the buyer's taking free and clear ownership. So it always bothers me because typically when a seller retains their own title company, they're paying a lot more in fees than they should be paying. Just my little tidbit on that. I wanted to give you that jewel before I go into myself and CLA.
When they don't retain their own title company, they're paying more?
When they do retain their own. So give you a perfect example. CLA, the way I'm set up, or we're set up in the market that I'm in, if you look at the Maryland Association of Realtors contract, clause 24 says that the buyer pays all title-related fees except for any existing encumbrances, which means if your seller is using CLA because the buyer picked us, you're only going to get a small charge of $250 just for handling your payoff because the buyer pays all the fees. Now, if you retain your own title company, they're probably going to charge you in the ballpark of $800, $900, $1,000. So the seller is going to pay a lot more money if they get their own title company in most cases, and title companies all do the same thing. So it's not like you got to feel like it's the buyer's choice of title company, so they're only representing the buyer. I need my own title company. I just wanted to give that tidbit of information. Me personally, I think it's a waste of money. Everybody is entitled to do what they feel is most best for them and what's most comfortable to them. But I just personally feel like that's a waste of money on the seller's part.
So what about when there's investors and these wholesalers and stuff like that? And I know they do it for a reason. So is the seller paying more money because of like a wholesale assignment deal or something like that because they want to use a specific title company?
Not necessarily. So with the sellers and the wholesalers, the reality is if you're an investor and you're doing wholesale deals, etc., I'm not gonna say super complicated, but it's not like a normal transaction for the title company. There's a little bit more in it for us. A lot of cases, those deals get halfway through and fall apart, etc. So for a title company, that's not ideal business for us. So typically your investors are going to lock into somebody they built a relationship with who knows that, hey, we'll deal with the headaches of helping you buy this property, whether it's a $25,000 shell in Baltimore that has liens and judgments and issues that the title company has to jump through hoops to try to clear. Because let's be honest, the smaller price properties typically have the most issues. So for a title company to do that on a transaction where they're not really going to make a lot of money, they're doing that because of the relationship with the investor, and the investor is going to try to use them to, when they sell the property, and then it's a little cleaner transaction because that same title company already handled the title work when they brought it. They can just go a refresh of the title work, and it's a lot cleaner for them on the back end. So it's a lot more behind the scenes to that in the case when you have a wholesaler or an investor.
Gotcha. Okay.
Yes, sir. Yes, sir. But just to jump back into your initial question, sorry to go off track here, not trying to hijack your podcast, but again, Marvin Reese, CLA Title and Escrow on business development title is business development manager, but I'm just a sales guy. I'm a business development guy. July 31st made 20 years for me in the title industry. The first 16 years I was in operations. At the point when that company closed down, I was vice president of operations, so I understand the title world really well, the nuts and bolts and how a title company functions and operates and what we're all about, which helps me be successful in my world as a sales guy because, you know, I'm not selling title to anybody. Everybody who's doing a real estate transaction has to have a title company. We all do the same thing. I sell my knowledge and my relationship on how I can partner with agents to help them through difficult situations, whether it be clearing a title related issue and working with our attorneys and owners of the company, or whether it's partnering with you on a seminar to help you grow and generate more business. So I'm a very well-rounded, very knowledgeable individual. I'm an investor, so I understand it from the client side. I've also originated mortgages, so I understand it from the lender side. Only thing I haven't done in the industry is a real estate agent role, and I'm going to leave that to you all. I don't envy you at all. I don't want no parts of that. So, but been in the industry for 20 years. Seen a lot, know a lot, have done a lot. CLA title, we've been in business for about 10 years. We're in about 37 states, national title company. We're heavy in the DMV area, so that's DC, Maryland, and Virginia. If you know anything about title, Fidelity National Title is the largest title insurance producer in the United States. We're their top agent in the state of Maryland. So we do a lot of volume, a lot of transaction because we're very knowledgeable, very experienced, and we have a very streamlined and efficient process. Little bit about CLA, a little bit about myself. Anything else specific I could answer for you as far as kicking us off?
No, go ahead and jump in.
Good deal. Good deal. So, you know, back to what I was saying, all title companies do the same thing, right? I always make the analogy, title is simple until it's not. The title company's responsibility is to ensure that the buyer is taking free and clear ownership of the property that they're purchasing, right? So title company, we start our process. Once a contract's ratified, we're going to get that contract over from the agent. We kick off our process by sending an order to an abstractor who is either going to go to the courthouse or in today's world, they're going to pull it up online and they're going to do what's called a title search. Essentially, they're looking at all public records to give us an overview of everything that's going on with that property. So we as the title company know what we need to do to clear any items that's existing against that property for the seller to ensure that's cleared up before the buyer takes ownership. Again, we have to ensure they're taking free and clear ownership. It all results in we have to clear it to the point that we can provide the lender a title insurance policy, which tells them that their interest in this property is going to be protected, and provide the buyer a owner's insurance policy, which tells them their ownership in the property is going to be protected. So high level, that's what we do. We go in, we look at everything that's on public record. There's some non-public records we search. You know, Baltimore City, Baltimore County, you have to pull what's called a lien certificate. That tells you stuff like if it's code violations, permit issues, maybe it's a rehab property, they opened up permits and didn't close them out, citations, that type stuff. So public, non-public records, we have to identify everything that's out there, and then we work behind the scenes to get all of that cleared up on behalf of the buyer. And that's a lot that goes between start to finish, but that's a high-level overview. And quite frankly, again, it's real simple until it's not. We get the abstract report in, we see that it's an open mortgage, okay, to Bank of America on behalf of the seller. No worries. We reach out to them. We request a payoff from Bank of America. We know that that lien is going to be accounted for because it's going to get paid off through the transaction. Okay. We see that the customer has a judgment. Maybe they, you know, had a hospital bill they didn't pay, and it's a judgment against the property for $5,000. We identify. Usually we can use a social security number to confirm if it is or is not the customer, especially in cases of common names. Then we reach out to that creditor to get the payoff amount, and we get it cleared through the transaction. Where title isn't simple is when you have hidden risk, things that we can't find or we can't account for. For instance, abstractors are searching public record based off of the information that we receive. If a document is, say, misindexed in the county records, or, you know, something hasn't been filed properly, or you got a case where somebody passed and one of their heirs weren't accounted for, That's not something that we can find. That's what we call hidden risk. That's why that title insurance is so important, because these types of things do happen. I've seen horror stories around it. To touch on that slightly, title insurance comes in two forms. It comes in a lender's policy and an owner's policy. The owner's policy is optional, but I can assure you that is not the place you want to try to save a few dollars when you're purchasing a home, because if anything ever comes up, you're going to pay 3, 4, 5, 10 times that amount trying to retain attorneys and protect your ownership in that property. And I've seen some cases recently that were nightmares where they didn't get owner's policies, which would have had them covered, and now they have headaches on their hands. So that's the overview of what we do. We're clearing title to make sure that the buyer takes free and clear ownership, and we ensure the transaction for the lender and for the buyer.
Let me tell a quick story real quick. When we spoke about the title insurance, I think around 2001, had I not had title insurance, I bought a property through a wholesaler in Baltimore City, and was on my way to flip this thing, closed on the deal and everything. Got a call 2 weeks after settlement, and was told that from the title company, I had a cloud on my title.
That's right.
Something happened. The home was sold falsely twice somehow. The owner, there was an older owner, who was somebody in New York, was supposed to have been doing property management or something, and somehow they got the information that right when we were about to close or the title search was done, then they went and filed the title or however that process worked. And so
yeah, probably filed something against the property. That's right.
Yeah, and so
and title insurance would have protected you against that. That's absolutely right, or it did protect you.
Right.
Now if you didn't have it, and again, we see a lot of cases, whereas if, say, for instance, a buyer is tight on cash to close or whatever, that's typically the first thing everybody wants to look at. Well, that's optional. Let's waive that. Well, here's the reality. When you waive that, you're leaving yourself exposed. The lender isn't going to waive. They won't loan you the money unless they're
Yeah. Looks like you might be having a little technical difficulty.
Them. So why would you leave yourself? It doesn't make.
Marvin, look like you're going in and out a little bit. Are you seeing that on your end? Well, until he comes back in, folks, you need homeowners insurance, title insurance. Look at your settlement statements, talk to your agent, talk to your title rep, make sure that you clarify that you see lenders and owners title policy. I believe also once Marvin, once that technical difficulty, once he comes out of that, he can also tell you that one of the things is that that title insurance is really something that a lot of people, like he was saying, a lot of people try to eliminate it, but in order to offset the closing costs, but it's something that's really needed. When he comes back in, we'll ask a few other questions about that. You good?
Yep, I'm all good. I'm back in. Not sure what happened there. Storming where I'm at. Maybe my connectivity dropped.
Gotcha. So title insurance. Who chooses the insurance provider?
Well, the insurance provider is based off the title company itself. So give you an example. There's a handful of, and actually quite a few, national title insurance providers. Fidelity National Title is the largest in the U.S. Then it's like either First American or Old Republic Title is number 2. Stewart Title is number 3, so on and so forth. But these are national insurance companies, right?
Mm-hmm.
Based off the title company, when they set up to do business, they get to choose or reach out and set up which companies are going to insure their transactions. CLA uses Fidelity National. Stewart Title uses typically Stewart Title for their underwriting. This company, let's say ABC Title Company, may use Old Republic. 123 title company may use First American, but it's all about the title company, and many of them have at least a couple of different underwriters they can write their insurance through.
Now, when folks see that fee on their settlement statement, is that an annual thing? Or how is that? When do they pay that? They pay it once, or they?
Title insurance is a one-time fee, man. So that amount you see on that closing statement, they pay it at closing. That owner's policy covers them as long as they own the property. If a buyer leaves that property that they paid for that owner's policy to their children, that owner's policy would cover their children as well. If they ever sell the property, of course, the new owner would have to purchase their own. But one-time fee covers you for as long as you own the property.
Gotcha. Settlement day is tomorrow. What do I bring to closing?
Really quite simple, man. And one thing that happened in our industry back in 2016, they kind of changed up. We used to have what was called a HUD settlement statement. Because of that crash in 07, 08, the powers that be made some changes, and they've changed up to what's called now closing disclosure. Even though they changed the format, it made it more user-friendly to understand. The closing disclosure, of course, identifies all of the costs associated with the transaction. But the best thing I like about the changes they made, not only did they make the document more user-friendly to read and understand, but they made the lenders have to send that out to the customer 3 days before closing. And even if the numbers aren't 100% perfected at that point, they're close. So it gives the customer a couple of days to review that closing disclosure, ask questions about anything they may have questions on or not be sure about, so they don't come to the closing table like a deer in the headlights. Okay, that's the best thing to me that happened with that change back in 2016. So the customer is going to want to, for closing, review that closing disclosure. If you have any questions, you don't understand something, that's your chance to ask the lender so that you have an understanding. When you get to settlement, your settlement provider should be reviewing that with you as well to make sure that you understand everything at the closing table. But it's always good to know coming in and get any questions answered beforehand, so it's no sticker shock, right? All right. Also, you're going to want to bring 2 forms of ID. Most lenders only require one, but some lenders require multiple forms of ID, so it's best to have it and not need it than to need it and not have it. And other than that, I always tell people, try to leave yourself plenty of time. You're closing at 12 o'clock. Don't try to come in and do the closing on your lunch break and then run back to work. This industry has a lot of moving parts. All it takes is some small hiccup. It could be from any part of the transaction. You're not going to close during that lunch break. Now you're stressed out because you couldn't run in there and close on lunch, and you got a headache on your hands. Try to give yourself at least a half a day, or take the day off if you can, so that you're not rushed, you're not stressed. You can go through the process. After you finish, you can go to the home, lay on the carpet, do snowmen in the carpet, whatever you want to do, but give yourself some time. That's the biggest thing I can give anybody as far as advice before you come into closing. Bring 2 forms of ID, review the closing disclosure, and make sure you got yourself plenty of time.
Yes, sir. Yes, sir. Now, question. We're gonna go off topic. Just a small tab. You're an investor. How do you feel about this market right now? If you had to buy a home for your family right now, what would your thoughts be?
My thoughts would be, the rates have went up some. The historic rates we saw at 2.5%, 3%, we'll never see those again. We're still in the 5% range. I think earlier this week or last week, they dropped right below 5% again. Yeah. Historically, that's still a great interest rate. You know what I mean? You can't even get a car loan for less than 5% in most cases. So, your parents probably purchased at 8 or 9%, and everybody's hung up on, I want to wait until the rates get back down to 3%. It's not going to happen. Real estate, you don't wait to buy real estate. You buy real estate and wait. It's always appreciating. It's not like a car. You drive it off the lot, it's going to depreciate, et cetera, et cetera. Real estate appreciates. It's a wealth building mechanism and tool. So don't worry about the rates. Buy now, get into something. The market shifting, becoming more of a buyer's market again. Somewhere down the line, when they do drop back down some, not back to the 2.5%, 3%. I don't think they'll get there. None of my industry professionals that's in mortgages think I will get back there. But when they do drop, refinance and get the lowest possible rate you can. But don't wait to buy real estate. You go ahead and buy. It's still an investment. You're still gaining equity every time you're making a mortgage payment. And historically, it's like the stock market. Real estate slowly increases in value. No need to wait and hang around. The market's not going to crash. You're not going to see a big drop in rates. It's just not going to happen, in my humble opinion.
And 2007, 2008 was the only time you've seen that great dip in the real estate industry.
Only time.
And the thing,
And here's the
uh-huh,
and here's the thing, that happened because our industry didn't have the right regulations against our lending partners, and people were getting put in loans they could not afford. They never should have been in the loans in the beginning, which would have prevented that crash in 07, 08. We had a frenzy in the last 2 years where people were again paying more than what houses were appraising for, etc., but they were paying out of pocket. That means they could afford it. They weren't in a product they couldn't afford. So that what happened in 07 and 08, that's a thing of the past. We're not going to see that. We're not going to see a crash. We're not going to see those historic low rates again. There's no reason to wait to buy a home, in my humble opinion.
man, Marvin, you gave us a pretty mouthful. Tell the people how they can reach you.
Email mreese, MREESE at C as in cat, L as in Larry, A as in Apple, title, TITLE.com. Phone number, cell number. You can reach me anytime, 443-805-4776. Whether you're looking to purchase a home and need a title guy, maybe you have questions, maybe you need to do a deed or something along those lines, give me a call. I'll be more than happy to have a conversation with you and guide you in the right direction.
Hey, I appreciate you coming out and spending the time with us on Hump Day Real Estate with Kendell, DMV. And hey, you're always welcome to come back. I know you got a whole bunch of knowledge that you probably wanted more that you want to get out and share, but we're on a short time frame today. Again, I appreciate you. To the folks out there, thanks for checking in, and we'll talk to you next Wednesday. Thank you.
Have a great one, man. Talk to you soon.
You too.